Good afternoon, traders. Welcome to the Moor Analytics Afternoon S&P 500 Gold and Bitcoin podcast for June 9th going into the 10th. Okay, we're going to start off with the S&P 500 index. We've been bullish overall from 3502. We've seen 4,130.25 to the upside. A lot of other bullish calls in here. I won't go over those. We held major exhaustion below at 63.53 and a quarter and rallied 1,279. Number of other bull calls in here. All bull calls are on hold. The break below 76.29 and a quarter. Spot in pressure now down to 72.47.25. We also had a short below 76.11.50. And then the trade below 75.51 projects us downward 70 minimum, 200 plus maximum. We detained 195.5 coming into today, and then dropped further from 73.55.50 down to 72.47.25. I also said to get short on a decent penetration below 46.16.65 plus 1.5 per hour. I also said it would be best if this traded above 74.75 before breaking below the line, which happened. We traded down to here. We traded above 74.75 here up to 79.71. And then we broke below that line where it came in right in here at 74.18.18, and it got smacked down to 72.47.25 before short covering hard. A decent trade above this formation right here which is gonna come in at 73.93.97. Is going to warn of decent short covering, 73.97. That's plus 10 per hour starting at 6 o'clock p.m. That's going to warn a decent short covering, and then a further break above this formation right here, which is also going to come in at 74.28.80. Plus 1.53 per hour. That'll warn of additional strength. The fact that this took out this significant structural low here is important also. Kind of changes the character of this downward move. And in the gold, saw lower trade again today. I warned of range expansion, which we saw on the day. Okay, the gold, I'm not going to go over all the higher time frame stuff, but we held exhaustion above at 56.26.80. It rolled over 1,526.8. Number of other calls in here I'm not going to go over. Then more recently, we held exhaustion with a 49.17.70 high and rolled over down to 42.59.90. Or 42.59.92. And we had broken, there's a number of other bearish calls in here I won't get into. We'd broken back above this formation yesterday and then traded up to 43.88.60 before failing back below the formation. I said that decent trade back below here will warrant a decent pressure and reestablish bear calls, but I'll stop short of suggesting leaning against this as a short. And that was primarily because we had an exhaustion level just in here, which we're holding right now and popping up a little bit from. And we have other exhaustion areas listed below. Trade above 43.88.60 is going to be bullish. A lot of heavy volume today in here. Decent trade above 43.77.10. Minus 14 per hour starting at 6 o'clock p.m. will warn of decent strength. And I would just be aware again that exhaustion level is exhaustion from possible exhaustion from the move down from 53.80. If you take that out, there's a higher time frame possible exhaustion at 41.62.60, but the next exhaustion level for this lower time frame move down is not going to be down until 40.68.90. And then we do have a significant area down here I'd be aware of down here at 40.21 even to 39.49. Bitcoin, which left a minor bullish reversal below yesterday, left a minor bearish reversal above today. That negated that bullish reversal below. We held exhaustion with an 83.215 high and rolled over 21,960. A lot of other bearish calls in here. Maintain gap higher tomorrow. We'll leave a minor bullish reversal below. Decent trade above 67.190. Minus 20 per hour starting at 6 o'clock p.m. will warrant decent strength. If we continue to roll over, I would be aware of possible exhaustion down below. Macro exhaustion at 57.531 to 53.738. Which, if it held and started a bullish correction, it would be a substantial bullish correction that would last for days / weeks. And I'd said that although yesterday we left a minor bullish reversal below, on the day itself this warrants a pressure likely down into the gap before / if resuming higher trade. We saw that. We actually took out the gap and left a minor bearish reversal above. And even though we left that minor bearish reversal above, this does warrant short covering, possibly back up into the gap before / if resuming lower trade. Okay, thank you for watching, and I'll see you in tomorrow's podcast.